Hey, good morning, everyone. Probably just Ezra and I out here. So we'll make it a very personal session. Are you there, Ezra?
Hello, good morning.
Hey, good morning. So yes, so it's probably just you and I. So let me quickly jump through the charts. So you see, obviously, so SPY, we're still looking bullish. Uh, this is our 4-hour chart. So everything's still looking good. So obviously we're got a pullback going on. 15-minute chart. So we had a failed breakdown there. We had a failed breakdown there. And now basically this could become a failed breakout up there. Um, so that's what we got to watch for. So everything's very bullish, but it doesn't mean that you cannot have pullbacks. So that's very important. You're going to have pullbacks in bullish markets, and you're going to have bounces, strong bounces, bearish markets. So, so looking at this, you can see this orange line here. So previous day's high. So basically, we um, we we went above it, and then we immediately rejected. So obviously, that got a lot of bears to jump in and see if they could push the price down. So when so when you get to previous days level, pre-market levels, it's always a level to watch. So if we're gonna just go and stop hunt it and just basically run above it and then reject, that gets the attention from a lot of bears because that's a good time to jump in. And that's when you move the market, is when there's something that's visible by all of the bears or all of the bulls and they all get in together. Okay. So this is now the 5-minute chart. So you can see we had a nice move up this morning, all the way. It strong move up, some sideways, and then we just kept going like there was, no stop. And we had some, decent pullback here, undercut the VWAP, and now we're, the bears are profit taking. Looking at this, I just want to so this is the chart I'm just keeping up for you guys, but I decided to put VIX to the side of ES so that you could see if it's respecting the alpha zone or not, because I think that's very important, and it was a little hard to see with the other layout. But I just want to take a look here at pre-market or overnight. You could see here around 4:46 a.m. We had a nice up signal, and you see before that it was just really chop, up down, up down, up down, and you could see that we're just below the VWAP and just not breaking through. Then we got a signal here. We got you could immediately see how much better looking this is. You can see how the alpha zone is spreading, how we're breaking above the VWAP. And then obviously the first profit target was there at the Bollinger Band. But you can see how uh, with you got a green band here, you got a green background, so it gave you a good in. But also I want to point out, guys, always watch for the money flow up there, because if you have an up move and you start seeing money flow, these vertical yellow bars, that's going to be one of your important indicators that says this is a strong move. And you can see that here in this chop, there was nothing there that gave you any confidence in that move. So that's very important. If you're going to let's look at VIX at the same time frame. At it. Um, so that was 446. So I think that's what we said. So you can see before when it was choppy, you can see VIX go up and down, but VIX is still above the alpha zone, so it was still pushing for ES to move down. But as soon as we started getting some nice movement down, consistent candles on VIX, combined with that money flow there. So you see the green dots there, you see the money flow. So that was a good signal that this is a strong move and you could pretty much jump in at any point there. Um, you then got, short signal there, um, which was really just chop. So this was what was that? That was 7 a.m. So if we're going to look at VIX around, so you can see here, VIX 7 a.m., you can see how it is just chopping inside of the alpha zone. So this again, this is what I use to know that the market is still chopping. And you can see here, VIX was respecting the alpha zone. Okay, and that's the move up we got. Then you can see it not respecting the alpha zone. Okay, and you can see how it goes sideways. And that was the chop. And then when VIX decided, okay, I'm going to move down and below the alpha zone, then we got another move up. So this is really important for you to understand how to combine reading the VIX, knowing that this is time to sit on your hands, and then combine that.
Can I ask you a question?
Absolutely.
Um, Sorry to interrupt, but you've touched on this a few times. So, do you have a somewhat general heuristic wait once you see these changes before you enter? So, you know, guessing that the first yellow might not act yet, depending on on the VIX, respecting the zone and spreading of the channel. I mean, so I'm wondering, like, do you have a sort of pace that you like to go at, where you feel like there's enough competition?
It's a good question, and I don't have a great answer, for you because a lot is comes with the experience of just sitting in front of the charts and seeing how they move at the same time. Like for example, you could see a candle like this, and even though it's a bigger candle, it might be formed very slowly versus that candle is formed like within a second. So even though this is a 1 minute chart, some of these candles are formed very slowly where others just jumps in and immediately uh jumps up. And so the the way that they form and the pace makes a big difference to see if are people chasing it. Now obviously when people chase it, it becomes dangerous because it could turn. But the biggest thing is for me is you know so number one, I look at the arrows. So this arrow says down. So at this point, I'm not going to be looking for longs. Okay. This arrow says up. So at this point, I'm not going to be looking for shorts. Okay. So that's rule number one. Okay. So you start with the arrows. Then the next thing is, I'd like to also look at NQ because sometimes it may not have that same arrow just yet or something else. So if they're in agreement, it makes for a much better signal. Where if they're not in agreement yet, then I am definitely more hesitant. So that's number one is look for the arrows. So now that you know that this is a down arrow, okay, now you have to understand that we are above the 48 cloud. We're above the VWAP. So that still gives us a bullish bias. Okay, so basically, because we're above them, we definitely want to be much slower on taking any kind of down trades. Okay, where when we're above the 48 clouds and it's sloping up, we're above the VWAP and it's sloping up, then, we want to be a little bit more aggressive with getting into those longs. And then obviously the opposite is true if you're below them and they're downward sloping. So the general bias is the first thing you start with. So we already looked at it. We said, hey, um, if you look at this chart, you have a failed breakdown. You have a failed breakdown. So before the market opened, in the morning. So these events here give us a general long bias. Okay, because we have a failed breakdown. Now we're above the VWAP, we're above this cloud. So when we get into this area, then our general bias becomes leans more bullish. Okay. So that means that we're going to be slow to, so we're going to need way more evidence to get into a short than, otherwise. Now, I showed you in this area here, VIX was going sideways as well. So there's no alpha zone forming. There's no alpha zone that's respected. The VIX is saying the same thing. You didn't have any kind of decent, money flow either direction. And then your general bias is still leaning long. So that makes this something to be ignored, at least for right now. Um, am I answering your question? I know it's not giving you, hard numbers to
No,
work with.
that was very helpful because even though you've said these things before, just to hear them all at once, looking at a particular helps consolidate, the understanding.
Absolutely. And I mean, ultimately, you have to hear the same thing over and over and over and over again for it to really solidifies and sinks in. So keep asking the questions. So now we have a general bullish lean because of the failed breakdowns, because upward sloping VWAP and being above it. Uh, we have upward sloping 48 cloud that's green and not brown like it was right there. And then we get a long signal, um, and then, we look at VIX and we see that VIX then also goes below the alpha zone. We see that we have green dots there. We have money flow coming in. So this makes for, much better signal. But, I also want to point out that so if you chase it, like if you like, okay, so you get the signal here on this candle. But let's say you're a little slow because you're like, okay, we're at the top of the range, because this blue line shows you the pre-market high. Okay, so you can see we're extremely close to the upper level of this box, and so there is a real risk that it could, reject there. So maybe you're like a little slow on the trigger. I mean, if you got into the longs here, then obviously this was a deep pullback, especially if you oversize, and then you probably would have been stopped out, and then obviously you would be too afraid to get back into it, and then you would lose out on that amazing trade. Um, so many times what work pretty well, if for me, and also as you look at this small triangle, this yellow triangle, so this is on the 1 minute chart. And so when I have a bullish lean, I have an arrow up. Um, whether I got into the trade here or not, this is really like 80+% of the time, this is good entry into that long, because you can see that you're already at the pullback and it yielded blue triangles, which is saying, we're moving down a little bit. Um, you had blue buying pressure and then it turns yellow and this triangle. So So this was the easy entry. I mean, nothing's easy, but relatively speaking, this was the the easier entry because it was easier to read. Again, bullish bias, up signal, um, and then if you got it here, that's great. But then blue triangle, yellow triangle. This, I call it like whiplash, but it's like changing the direction very quickly here. Um, this this was a good entry. Obviously, you can see here, an amazing squeeze to the upside. Based on that. So does this yellow triangle make sense? Why that's a good entry. Because this is much harder because this is such a fast move that you end up chasing it and then it rejects and then you're too afraid to get back in, even though I mean it you could definitely make this work. This is the easier entry. Does it make sense? Okay, so you can see how.
It, it does make sense, but I just looked back a couple of days to see if I could find another example like that. I feel like I see that fairly frequently. So far in this quick effort, I couldn't find. What I did find were a number of times where there was a large arrow, then there would be a contradictory. That sometimes throws me off. It sort of makes me think, should I be exiting? Um, that does happen fairly frequently. Yet the move often continues, and that small triangle turns out to premature.
Yeah, so again, if you're looking for longs, I mean that's the number one question you have to ask yourself. Am I looking for longs or am I looking for shorts? Okay. So if I'm looking for longs, and this is now earlier in the day, then when I get a blue triangle, I should be ignoring it. Okay. If I get a yellow triangle, then I say, okay, I'm going in. And then, obviously, so if you get into the trade here, you have to take your profits way quicker than if you got in at the beginning of the move. So you have to understand that where you join the move makes a big difference in how long you want to wait before you lock in your profit. So if you get in here because you have um, a bounce of this VWAP and it's not upward sloping. Oh no, it's not the VWAP. It's the Bollinger Band, which we know that price likes to stay within it. So you see it bounce off the Bollinger Band. You see it bounce off this mean reversion band, and then you see the alpha zone invert. You see these triangles. Obviously, if you say, okay, I'm gonna get in because I have a green band, I have a green background. Um, then you could hold much longer than if you only get in like that's 6 a.m. That's so an hour, more than an hour later, you're not gonna want to hold as long because the move might run out of steam. Um, but the big thing here is that the money flow. Okay, so when you see the money flow and all these green dots, that is one of the strongest indications to get into the move sooner than later. You can see that um, it gets here and you got uh, right money flow, and there you had one instance of it too, but you could see that there was no alpha zone that was spreading its legs. So you can see why that was not a good time to get in, because even though you had one money flow, you didn't have an alpha zone. Okay, where here you had a beautiful alpha zone, you had some small consistent candles, which is also healthy sign because like if you have big candles, it usually means that someone's chasing it, and when they chase it, it tends to turn around. But when you have small, consistent candles, it makes for a stronger a move that's gonna probably last longer. Um, and then that money flow up there. Now give me the day and time where you saw something that may not make sense. So let's go look at times where things didn't work out, and then look at why. Because it's easy to look at a chart and say, look at all of the reasons why it worked, but I think you also want to look at times when something doesn't work the way you expect.
I'll take that as homework because that takes some time. I don't
Oh, I
want to.
thought you just found some. Did you not
I'm
just
sorry.
find something we can look at?
Oh, yeah, it was not a great example. I think what I would like to say though is that very rare in my review of the chart to see an arrow be really wrong. It's very rare. What does happen is sometimes you don't have much time to act on it. Like the move may not last very long. It's not a guarantee of a long move, obviously,
Yes.
but it is very rare. It's very rare to see an arrow pointing up and then immediately to be wrong. Really get a little bit of a chance. And I think that kind of under what you might have just been saying. Maybe I don't want to exaggerate what you said, but sometimes it feels to me like it's better to act a little too quickly on the arrow than the other way around.
Well, I mean,
Because
sometimes, I mean, so it depends. So if you act quickly, you have to first of all make sure that VIX is in agreement.
yeah,
Okay, you
and
have
money
to,
flow.
and
Yeah,
money flow. Like so if you have VIX in agreement and you have money flow, then I think acting more quickly on an arrow is fine, but you also need to not hold on for long when you realize you're wrong. And also, you shouldn't be adding to losers. So, like, if you get in a trade and then you go red, don't say, okay, now I can get it even cheaper, because the multiplier, like, if you lose $150 on a trade, okay, if you have three of them because you thought you were gonna get cheaper. Now you're at 450 bucks, which is, I mean, it's easy to recover from 150 bucks, but to recover from 450 is much, it's a much bigger challenge. So as long as you're disciplined, then I think when you see money flow, when you see VIX, then you see the alpha zone, you see buying pressure, um, then you can act sooner, but you still want to lock in profits quickly, because you're trying to build up your buffer, and then like I say, this is and you don't always get these, but when you get this yellow triangle where everything's already saying up, then that's usually a very good entry to take. Uh, some good questions. So now we get to the top here, and you can see it like buying pressure changing color. You can see um, money flow just quickly dropping off. And so that time, let's see, so that's 9:08 a.m. So let's see what VIX was doing at the same time. So VIX, so you can see your VIX, boom. Okay, so you can see how VIX was telling a story. Bounce, drop, and then so this was a higher low, and then it just kept coming. So again, if you see confirmation from VIX, I think you can get in a little bit more quickly, because they're in agreement. And sometimes they're not in agreement, and it's still kind of work. But if you wait for a pullback, like so here you have a long and then you have a pullback, and it's basically holding above the lower part of the alpha zone. So this is showing you that it's holding. You're not breaking through it. And sometimes you can break through it, obviously, and can go back up. But when you see it hold above the bottom of the alpha zone, that's also a good indication that the move up might be holding.
I have an example for you. You
Okay.
asked for
Yes.
now, so you have a magnificent signal at 9:46 this morning. You know, reason I say magnificent is it's still going, it's still working. Also, it happened when I was waiting for you to start. I was watching a YouTuber who uses values of point of control and profiles, volume profiles.
Sure.
He was going for a long, just as your indicator was showing a short, and you were right. He was wrong. That was a nice little victory. At 9:54, so 9 minutes after the arrow, is a an up triangle, which of course we know from it because the move is still going on. That proved not to be
Was that on
an
NQ?
option.
I don't see it on ES. Was that on NQ?
No, I thought it was on ES.
Well, so we're looking at ES. I don't see an up arrow here.
Not an up arrow, an up triangle. Let me get back. So here's the down arrow is at 9:46. There is what I think is a 1 minute up triangle at 9:54.
Okay, yeah, I mean, do you see the screen here on the charts channel? I don't see the triangle there. We can we can
I
look
have it on a trick view.
on ES.
Yeah, it's ES. It's a 2 minute chart. Is that the reason that
Uh,
I'm not seeing it? That I see it and you're not seeing it?
I
Let me
don't know.
switch to a.
Let's look.
I'm switching to a 1 minute.
Um,
They have disappeared
okay,
on
so
me here.
there's okay. So at 10:10 there was an arrow triangle, but yeah, I mean, I don't use the 1 minute. Oh, sorry, the 2 minute chart. But yeah, I don't see it. So we can look at that afterwards and see why you see a
It
triangle.
looks like it disappeared on the. But when I switch to the 1 minute, I don't see it now. So
Okay,
that
okay,
explains.
okay. Yeah. So basically, so if you look at this, so you have this saying we're going down, but then you have this humongous bounce here, where obviously you could have made money on a long here, okay, and because I mean that's a decent move, um, and they want I mean, the market wants you to stop out before they move without you. Okay. So even when you get a short direction, which you can clearly see it's the right direction, there's these traps sometimes or a lot of times where it is going to stop you out and then go down without you, and that's precisely the reason why it's, if there's no proven trend, I lock in profits more quickly. Like if I get into a short, I'm gonna be locking because this yellow line shows the low of the day, and obviously it changes here. But so if you're gonna get into a short anywhere here, your first profit target is always gonna be the low of day. If you get into a long, your first profit target always will be the high of day. Okay. So those are things that's very important to remember, and that's why the indicator draws them for you. Because when your profit target is the low of day, you might say, okay, that's just not enough range for me to take this short. Okay. And you can see because everyone took profits because some people might have got in there, but because there's a lot of profit taking at the low of day, that's one of the reasons why you have such a strong bounce. Because this low of day is a profit target. When you start taking profits on a short, you go long. That's also where bulls will say, okay, this is our chance to get in. And so you can see, so this price action you have to be able to read and say, this is the reason why we have a bounce here is because of profit taking. And then the bulls pile in because they see this and they start chasing it. And you can see they chase it because, it's full-bodied candles. And then this could have kept going, obviously. But then the bear said, okay, thank you very much. And they just knocked it down again. Does that make sense? So you can see this alpha zone never inverted. So we got yellow buying pressure here. Because obviously this was a very strong bounce. Um, and now when you look at it, so when you look at a downtrend, okay, what do you expect in a downtrend? Downtrends, you expect bounces to be sold. So when we have this move down, we have a strong bounce and it's getting sold, and we're now below the alpha zone again. Right, this gives me an indication that we're acting like we're forming a downtrend. So as soon as you get below the alpha zone again, you could say, okay, I'm gonna go short because um, we are acting in a way that's consistent with a downtrend. In a downtrend, you have bounces that sold. In an uptrend, pullbacks are bought. You expect them to be bought, and if that stops happening, then the trend's over. So we expect profit taking. So the bounce is bigger than what I would have thought or anticipated, but the market does what it wants. But then, as soon as you start getting pushed down, now, as soon as you're below the alpha zone, now you can say this looks like we're acting in a way consistent with a downtrend. So if you get in, your first profit target has to be the low of day. The next profit target has to be the VWAP. Okay. Um, but I mean, these things. I mean, there's enough money there. $100, $200. I mean, so if you go from what's that? So that is um 95, and so it's 4 points. So 4 points is like $200 in ES. So that's decent. Um, we get another bounce here at the 48 cloud at this lower band, and again, it acts very similar to this one. And then as soon as we get sold, so we're acting consistent in a downtrend. You can see that. Bounce sold, bounce sold, bounce sold. Okay. Bounce sold. So when you look at these things, this clearly tells you that you're not looking for a long. Now, can you make money on a long? Absolutely. Okay. Um, so I'm not saying you cannot make money, but I'm saying with this strategy, it's you're not looking for long at this point in time. Okay, because every bounce is sold, bounce sold, small bounce sold, bounce sold. Now, at some point, that will stop working. You have to understand that. So that's why usually in a downtrend, as soon as you see this, then you want to sold those balances until it stops working. But that also means that you want to make enough profit so that when it stops working, you lose less than the money that you build up by shorting every bounce. Um, but you know, then the other side of our strategy is looking at VIX. So now, if we're going to look at what VIX is doing, so you can see VIX here, and I'm just going to put them on one chart again so that it's a little bit easier for us to. Oops, this mouse is full. Okay, so now we have them aligned. A little bit. Let me. I can. So we'll do that. Okay, so now, so you can see VIX going up, and then VIX going a little down, a little sideways. Um, VIX bouncing, VIX going down. But you can see here VIX is pushing, up. It's still, um, above the 48 cloud, a little bit of sideways action. So VIX is still undecided. But now, if you watch it, you want to see what VIX is doing, because if VIX is suddenly rejecting here and inverting the alpha zone and staying below it, that could be your sign that uh, ES wants to change direction. Now, like I said, for me, when I look at ES, we are acting consistent with a downtrend. We also know that ES would like to stay within the Bollinger Bands. Okay, so this is the Bollinger Band. So this is not a bad place to bounce. The other thing to remember is that if you stay outside of the Bollinger Band, that's another good indication that you're in a trend move. Okay, so right now, we know that we have a confirmed downtrend because every bounce has been sold. So the question is, how long is it going to stay in this downtrend before it traps bear? So the only way the only time that I change my direction on a downtrend is a bear trap. And so what I would like to see is I want to see impulsive candles down, followed by some by an inversion candle, an impulsive candle back up that will trap the bears. So usually that's what you get when there's a change, when a downtrend changes direction. That's number one. And then the other way is some bottoming pattern where a level holds. So if we go sideways here for 40 minutes to an hour, and this level holds, then at some point the bears might give up and say, I'm just going to take my profit and I'm gonna move on. And again, when shorts take profit, they have to long to get out of their position. Those longs are the ones that basically then will help to change direction. So, and again, as long as every bounce is sold, we're still in a downtrend. And so I'm looking for bounces that I can short. So we're not shorting at the bottom. We're shorting at the top. Where's the top? This is a shallow pullback to the bottom of the alpha zone. A deeper pullback will go to the top of the alpha zone. Okay. We're below the VWAP. We're below the 48 cloud. We're below the alpha zone. So everything here shows that the downtrend is still intact, and we're not looking for longs without a bear trap or a level that holds for, you know, I don't want to say extended period of time, but it has to hold for long enough where bears just give up. Does that make sense? Um, Alice, Ajaru, anyone else want to contribute something to the charts or price action? We can see VIX is still on the way up. It's still strong. It's respecting the alpha zone. So, you know, until while VIX is pushing up and respecting the alpha zone, we're still likely to stay in the downtrend. Now, this is a previous day level for VIX, so if we get around this level, you might see a rejection there. So that's something to watch out for. But for right now, like I said, everything's still looking good to short every bounce. Uh, let's look at NQ. So NQ, a lot of sideways action, but also now moving down. We have the red bands, we have the red background. So I'm gonna keep this up so we can watch VIX at the same time. So there's VIX 1 minute and then ES at a 1 minute side. And so you have to understand that at some point the um the bounce will not be sold and the downtrend will might fail. But okay, so you see this big candle on VIX. So this is telling me not to short this bounce here. So I'm gonna want to see more evidence to stay in to take any kind of short. So again, if you short the bounces, you get you short it big candle, you lock it in. Okay, so you look for bounce short. It's here you look at bounce to short, but then VIX says okay, slow down. Okay, if if you got that short, then you know to immediately get out of it. I mean, and the short could still work, but if you thought this was a good place to short the bounce and you see this on VIX, you immediately close it. And now maybe you break even, maybe you lost $10. Okay, but the point is your loss is very small. Now you could say, look, I'm gonna long this, even though it's a little premature, okay. As long as you can immediately stop out when you're wrong. Now, again, I prefer to get more confirmation, but VIX is telling me not to short here. Okay, so even though you know, so this could get bears to chase the move down. Okay, and they could be right, but VIX is telling me to not take the short right now. Okay. Also, I have yellow buying pressure. So, I'm definitely going to be very slow to take a short um, at this point. Now, we have blue money flow, but it's not bright. It's more dimmed. So, it's definitely it's definitely trying to bottom here and change direction. It's still too early to say. Okay, we probably will still have quite a bit of chop here to go on. But again, if you think it's short is the direction, you want to short at the top. If you think long is the direction, you want to long closer to the low of day. Okay, it's really important for you not to long at the top or short at the bottom because you're you're getting a bad entry, which means that if you're wrong, you're gonna lose way more. Where if you get a good entry and you're wrong, you lose much less because you got to know that anytime you trade, you're putting risk on and you might be wrong.
Rick, can I ask you two general questions? One of them is, do you think that trading is somewhat more difficult right now because we're at all-time highs? And the other is, do you prefer that NQ leads, or do you just like to see agreement and it doesn't really matter? I mean, of course, since you're going to only be trading ES, if NQ doesn't lead, you won't see that as a signal before you enter, right?
Yeah, so so I do like it when NQ leads because if you look at the biggest companies, in the stock market, they're on NQ. So so they tend to pull the market. It's nice if NQ leads. It's nice if they're in agreement. And so if they're not in agreement, I think it's important to size down or maybe sit on your hands. Um, so that's very important. Then the other thing is, all-time highs. Yes, it does make it harder to trade, um, because when you're at the top of a box, when you're at the top, then the short becomes a low risk trade. And again, low risk doesn't mean that you're going to be right. It just means that when you're wrong, you're going to lose a little. So you risk a small amount. So that's why it's low risk. It's a low amount of money that you're risking if you're wrong. But if you're right, it could pay really well. And that's why close to the top, you're going to expect pullbacks, but then inevitably they're going to lead to a squeeze. Okay. Because of those guys that took that low risk short and were too greedy to lock in profits, and now they get squeezed. Okay. So so again, no short for me here, even though we're in a downtrend because of VIX. So like here, like I said, if you want a long, this was the right spot to get in. So this double bottom nature, I mean, if so if you're trading options, I think like a small lotto options call might work well. Like I think taking calls here and stop it below the low of day could work. Um, Again, it's risky because we're in a confirmed downtrend, so it doesn't mean that it should go up. We have blue buying pressure, we have money flow, so it's printing, everything's printing bearish. Okay. But that's sometimes when the best traps are made because everything, if you look at it, it's very bearish. So it will get bears to join the trade. And so if you have a big so if I get a big impulsive candle down, like you guys know what impulsive looks like. Um, and I'm not talking about a teenager boy. I'm just talking like if this suddenly in like a second, and that's what I mean. The way a candle is formed makes a big difference. But if I see an impulsive candle that wicks down here, maybe even undercuts it, and then move up, I'm definitely getting into the longs, right away because that is a good indication that we might be turning up. And it doesn't mean it has to. You got to know that every trade could fail, but while VIX is moving down, I'm not taking shorts anymore. Like these were all good short entries, but now VIX is below the alpha zone. Alpha zone is not inverted yet. But if I get a momentum candle down and then with a long wick here and go up, I'm definitely in longs. And you don't have to be the first one in the long either, but that would be a good long. Now, if it's just a slow grind down like it is doing right now, then I'm got to be way more careful with longs because there's no no one's chasing it, and it doesn't give me everyone to stop out. But again, I cannot do a short at this point.
Speaking of shorts, I think you've said that you, if not always, then usually use a dollar based short. I'm wondering, when you're in a more volatile moment, or let's just say that if you're at a trading at a point that volatility is relatively high, that imply that you need to have a wider stop,
Uh,
like to use an ADR based stop. Take that into account.
I mean, probably, but that's not how I do it. Because like to me, so you can see VIX is bouncing a little bit here. But so yeah, I mean, so that's a lot of people will tell you, okay, um, you have to use bigger stop when it's more volatile, and technically that's 100% accurate, and I completely agree with that. Um, but I can also tell you that um, if it's too easy to make the stop so big that you just lose so much, or you get to a point where um, you start revenge trading because your stop was too big. So for me, I rather just so my risk. So I trade one ES contract at a time. My stop loss is pretty much $250, which is basically 5 points on ES. So if I get into a trade and I'm wrong by 5 points, then I'm stopped out and I happily lose that money because I know when I have a bigger stop loss, I usually lose way more. So for me, a 5 point stop loss on ES is reasonable, and so if you look at the ES ATR right now, it's 2.2. So that means on average you're gonna need two candles, big candles against you, to be stopped out. Um, and so I'm not saying that's the best way or the right way to do it, but that's how I do it. And so I like to trade, take profit, 25K accounts, which so if you're doing a test on it, your drawdown is 1500 allowed, and you have to make 1500 profit to pass the test. So that means that I have to be wrong 6 times to blow up that account. Okay. Now, if you take 6 bad trades in a row, then obviously you should just stop trading for the day. Um, and I think you should have stopped sooner. But, so for me, it also becomes that math where if I want to, pass, take profit test, unless you go super aggressive. But I don't know, the times where I go super aggressive and, I have a very low success rate on trading very aggressive. So I'm not good with that. I tend to then oversize, and then even when I'm right in the direction, I get stopped out and my account's blown. So I just know for me, staying small, like one ES contract at a time. If it's a good setup and it works, I'll add a second one that I will try and keep as a runner, and then so I'll have one where I just like scalp, and then another one that I use as a runner, and with a stop loss so I cannot lose money, and then I kind of forget about the runner while I'm just trading normal scalping with one ES and try and lock in $150, $200 at a time, and then risking. So I risk more than what I'm shooting for, on most of my trades, except for the runner, where, I'm hoping to get way more out of it. Does anyone else want to talk about how they do stop losses and how they manage that? Did that answer your question, Ezra?
It did, but it raised another question,
Okay.
which is you could either today or another time, because I know, short probably, could talk at some point about how you think about adding uh, that additional ES contract. I'm sure there's a lot of experience in it, but there are certain things that you tend to see in the, if you look back when you did that, what the pattern would be.
Yeah, I mean that, so it's rare that there's a runner, because you need a proven trend, whether it's an uptrend or a downtrend. Like this morning, um, and again, I'm not trading while I'm talking, because I just find that too hard to do. Um, some people can do it, I can't. But so if you shorted, let's say you shorted this, and then you take profit, and then you short it again. Now now you have, decent amount of profit. So when you get in to, your second or third contract, now you can hold it for, much longer. And then, you could say, if I have another green candle, I'm going to just start scalping. So maybe the short that you took there is something where you set a stop loss on it, at break even, or you can give it a little bit, because you have more profit. You can even say, I'm willing to lose a little bit of money on it, but then you just forget about it, until you get reason to say, okay, it's changing direction. So that's basically what it would be. It's like, you had two successful trades, so now you're up, let's say, $500 um on the day, and then everything still looks good on the downtrend. Then you get in, but that guy, now you consider your runner. Okay, so you set your stop to either, and again, don't want to do it break even immediately, because that just will stop you out right away. So you still have to start with a $250 stop loss, or whatever you decide to do. But then when it's clearly working, then you can move it closer. Or you can just say, look, I'm still willing to risk $250, and that's fine. Or you can move it to break even at some point. But then you kind of like put it on the side, and then you say, okay, that's my runner. Um, I'm gonna, when certain things happen, I'm just gonna close it out. And like what I like to do with my runners, and I spoke about this before, is um I look at, like, let's see, and my software does it automatically for me. So when I say manage the stop loss, so you can pick the time frame. So if you get in here, you can say, okay, use the top of the 5-minute candle as my stop. So it would move the stop there while I'm here, and then it will just keep using the high of the previous 5-minute candle as my stop. Okay. Um, Now, if you have, so that could be on a 10-minute candle. Oops, I'm typing on the wrong keyboard. Let me just get the right keyboard. But so that's how I manage the stop on my runners, is with the software. So So that's a 10-minute candle. So you can see, um, so if if you already set your runner here, then this would have stopped it out because that candle is a little bit higher than the previous one. Um, but otherwise it would have stayed in. For a trend move, I find the 12-minute candles to be very good. In my back testing, that gave me the best results for the stop loss management. And then obviously, if it's a long, then it's the bottom of these candles that you're going to take. But that's how I manage the stop loss on the runners, and I just have the software automatically move it based on the time frame that I select. If it's a new trend, I use the 5 minute time frame. If it's been ongoing for like 30 minutes to an hour, then I use a 12-minute chart. Does that make sense?
Yes, I know you have a lot of screens, so maybe this question doesn't make sense, but what is your primary screen once you're in a trade in terms of time frame? The 1 minute, 5 minute.
I pretty much stay on the 1 minute chart for trading. So I look at the different time frames to see what's happening. So now we're at the previous day's low here. So obviously that was quite quite a move down. And again, we're in a downtrend. Every bounce is being shorted. Now we're at a level where we could bounce. So you can see that there. You can see money flow coming in. And then VIX, we were not looking at the VIX chart while we looked at all of that, but VIX made a very clear move up here, and that helped. So if you wanted to catch that short, that's what you were looking for. So you can see here, because we said, hey, I'm not touching along because we're moving down. But then you see clear candles here where VIX is just saying, ah, I was just trapping more bulls. So that's where VIX, those candles clearly told you, um, there was a short, but you had to just jump in. Now at this point, like I said, you're at the previous day's low, okay, and so this is an opportunity for the bears to say, "Hey, I want to bounce here." Again, the the bulls will try and bounce it. The bears will take profit because this is again a profit level. So we expect the bounce at these levels. So this is the previous day's low. It's an important level. We're gonna expect the bounce. Now it doesn't mean that the bounce is gonna hold. It means that everyone's taking profit. And because everyone's taking profit, especially the first time when you get there, your probability of profit taking is much higher. So you're going to expect a green candle there. Um, the bears will use that green candle and say, okay, I'm getting a better price before I get in, and then you keep going down. Um, but this is the time for the bulls to step up. And so if they don't step up, then you could get even further momentum towards the downside. So this is where you want to keep watching VIX and see, like, is VIX pulling back? Because if VIX keeps making these big candles, then you can expect some of the momentum to continue to the downside. So let's look at the higher time frame, and just so we can see what kind of targets we could be looking at. So now if you look at this, so you can see this is like an overextended level. So we're getting overextended here. But like the next level that we're expecting to hold would be the low right here. So that looks like a very strong level, which is what's it, 67.55 about. Um, so so you would expect it to run, to bounce, run out of steam if it goes there, because you could see this reaction we got there. So we got a very strong reaction previously there. We had a strong reaction there too, but you could see that it did not last long. Uh, so again, because we're at all-time highs, that low risk trade is always something you want to watch out for, because we keep making all-time highs day after day, and that again is the opportunity for short. But this market is so bullish, we tend to just bounce right back, after that. So that's where you have to be a little bit careful. But again, scared money don't make money. So this setup here is impulsive enough that this could be the bear trap that we waited for. So again, like if you're looking for the bear trap reversal, this is it. So impulsive move down, this candle here, flipping long. Now we don't have any other confirmation just yet, but you know, you could definitely get in a long year and just cut it if you're wrong. And this could definitely even go back down here and test this level again before it bounces. But so this is the first part in the making of a bear trap. Okay. Now, if you can get in these very early, then they make for great trades, because you could usually hold, through these, because you got in pretty close to the bottom. If you saw those impulsive, like if you saw this candle, this was, an entry, so you could hold longer while like everyone else is waiting for more confirmation. But you have to know that if you're wrong, this bear trap, this becomes a failed bear trap, and a failed bear trap is a bull trap. Okay. But if you want to get in on this move, the closer you get in to this bottom level, the more likely it is that you're going to be, profitable if this is a bear trap. Now, again, so let's watch. So now, is this a bear trap? Only time will tell. But we have the first part of it that that looks like a bear trap. So now, if we start failing below this low of day, then basically it invalidates the bear trap. So they're very dangerous to get in early, but if you get it close to the bottom here, you can make out like a bandit. But we're looking for VIX to show confirmation. We're looking for buying pressure to show confirmation. We're looking for money flow to show confirmation. We want the alpha zone to invert. I usually, when I see something like this, I take, you know, I take the trade, and I usually lock in profits close to the alpha zone, because that's usually where it may start rejecting. Now, the first time it tries to flip the direction, usually, like it has a lower success rate. Usually there's a valiant attempt that's made, and then it gets to the alpha zone, and then it drops down. So that even that drop down could make you good money. But so usually the high probability is that we're going to reject here and then try another time today to do the bear trap. And then just, so I know I say I don't trade while I'm talking, but this one was just so good. So I just made $500 on this bounce. Then that was an NQ, but so I just posted out because I expect a reject here, and come down, and then I'm gonna watch VIX to see if it's holding, gonna hold this or not. But usually, the first attempt to change direction fails, and then later, if you have a downtrend that lasts this long, then your recovery year on the first attempt has lower probabilities in my experience, where the second or third attempt has higher probabilities. But again, we're looking for buying pressure confirmation. We're looking for VIX confirmation. Let's see what VIX is doing. Um, so VIX is going sideways, so that means it's undecided. It could go down, and if starts pulling back, that could give us confirmation for the bear trap. But if VIX is just going right back up, then obviously it's more likely to become, bull trap. But even this small move, it went up. It went up to $640. But I only locked in. I'm gonna send you a screenshot. Just so just like seeing that impulsive move and just getting in. So that was very quick profit, and I don't know if it's gonna last or not, but just seeing this impulsive move at a important level, and then just locking in the profit very quickly. Um, there's that's what scalping is. Let's see, and then so now, so VIX, so this is saying that maybe it holds, but you see, by the time you have all of the confirmation, you're back to the VWAP where you could run, out of steam again. So so this so VIX VIX is starting to give us confirmation. Okay, I'm gonna put this on so we can watch this. But this is what a bear trap looks like. Impulsive move down, and these things pay really well. Then it goes up, and usually around the alpha zone, it rejects and come down. And then if it becomes a failed bear trap, then it keeps going lower. Otherwise, it might go back up, and it might go as low as this low of day before it goes up. Um, but if you get in quickly and then you're not greedy, you could make decent money on these bounces. Um, and like I say, the first attempt at changing direction usually fails. So that's why, I lock in close to the alpha zone. You can even make good money if you short around the alpha zone on these moves, because they usually go down a little bit and go up. But this is all, you just gotta take these trades, and just stay small. So like, I trade minis. You could trade micros while you're practicing these things. But you can see the buying pressure's coming in, so that's looking good. VIX went down, but it's still sideways. So what if you want to wait for full confirmation? Then what you want to see is you want to see the alpha zone invert. You want to see yellow buying pressure. You want to see yellow money flow. You want to see VIX below the alpha zone that inverted. So those are all full confirmation. Now, if you wait that long, you miss a big part of the move. Okay. So the question is, how much confirmation do you need to get, part of the move? And when you have less experience, it's probably better to wait for full confirmation. And then at that point, you should see an up arrow, you should see yellow triangles, you should see, all of those things, um, or that move up. So, I would recommend that if you're not a profitable trader, that you wait for that full confirmation. For me, I like to get in early and just scalp it. And I showed you in the screenshot where, I mean, that's real money. But I also know that I can be wrong, but I know this is a profit taking level, and it did a nice undercut. But it could still go either way. And and again, the first attempt at changing directions have a lower probability when you had a downtrend that lasted this long. So the odds are against the longs here, like I said, but as a scalp, you could still make money, and the market does what she wants to do. But again, now you see a big green candle. This is not the time to go long, okay? Because that's the mistake a lot of traders will make. They're like, okay, this is looks like a bear trap, so now I'm gonna get in on this big green candle. And I can tell you, chances are good that we're gonna see a red candle next, okay? Because the market wants you to do all the wrong things, but you shouldn't be taking along on a green candle like this, because now you're chasing. You're at the top of the move. You have to move quickly, like I did, and got in closer to the bottom, and then not be greedy, because no one knows what's going to happen. But if you chase the move at the top, then you're gonna be stopped out. So you just the best trades are the hardest trades. So the best trade is taking a long here and taking a short on a green candle. But if you go really small, then yes, you can have a much bigger stop loss. And for me, the thing that impacts stop loss is really if you go small, like if you do one or two micros, um, then you can hold longer. Like if you're gonna do micros, um, with micros, I think it's okay to, and I don't want to call add to losers, um, because if your plan from the get go is that I'm gonna DCA dollar cost average into it, then you could say, okay, I'm gonna get one micro long, and then if it dips, I'm gonna get another one, and I'm gonna take, maybe up to three of them to get better prices because I'm training for this failed breakdown, which is Mancini's favorite trade, and I know Nina's favorite trade as well. And they are very undecisive, if that's a word. You're at the bottom as people decide, but you just have to say, okay, I'm gonna trade this. I'm gonna get in small, and you could get you know two micros. So you get a micro, red candle, another micro, red candle, another micro, big candle, lock in profit in your favor. So if you take that kind of scalping trade where you're like, okay, I'm gonna trade this and see where it goes, and I basically add one micro on every red candle close, and or up to three or four or five, whatever the number is. But I'm not gonna trade on this small red candle because that's not worth it. But then on green candles, I'm gonna lock in profit so that I can build up my cushion in case it doesn't work. Then I think it becomes easier to trade these, but everything still looks consistent with the bear trap. So you could see impulsive move down. You have this inversion candle. We're still holding at the yellow buying pressure. You have VIX that's still moving down, so that's good. Um, so I mean, so everything is still consistent with a failed breakdown and bear trap. Nina, did you wanna? I know you're the expert on this kind of trade. Did you wanna contribute here? So that's a 15-minute chart, 5-minute chart. So you can see this double bottom there. So I mean, yeah, and you can see this impulsive move down. You can see this inversion candle. So so everything is still consistent with, a failed breakdown. And if this so if this failed breakdown, so like I say, if I have a proven downtrend, my prefer excuse me, my preferred way to change direction is with a bear trap, with a failed breakdown. Those are the best. Um, Otherwise, you need sideways price action for at least 40 minutes to an hour to show that the level's holding. But you have a failed breakdown, you're at an important level. And so this looks consistent with a bear trap. Now, when we get all of the confirmation, uh, then your bear trap makes for good trades, but they usually run out of steam at around the VWAP. So when you get there, you want to definitely be quick to take profits. You want to keep watching VIX because it will tell you which way things are going. I mean, this is nope. So VIX is the number one thing I look at when it comes to these traps because it's very responsive usually to tell you which way things are going. And this trap is still valid even if we go as low as the low of day. So even if we go down here, the the possible bear trap is still in play because they will do everything in their power to get you to stop out and not be in the trade, and then they'll make the move without you. But again, it's the first attempt at changing direction, so it has a lower probability than the second or third attempt. But it's a very important. I think it's a number one trade that everyone should practice. They're not easy to trade, but they pay the best. And once you have full confirmation, usually you know that you could buy every pullback long, and then when you get close to VWAP, you want to lock in, and if everything looks good, hold a runner. So we still have yellow buying pressure. We have the green dots. The money flow is negative. So, uh, but that's expected because we had such a strong move down. But we need that to flip to yellow to give us a confirmation up. You can see we're staying below the alpha zone. So from a bear trend perspective, we're still selling every bounce here. So so you have to realize that it's still acting like a downtrend because right now every bounce is being sold. Now, if we break this low of day again, you'll see more momentum to the downside. Just like I told you, if we broke this level, we're going to see more momentum. Um, so this is very important level for the bulls to hold because all of this is then structure. So if we get above this pre-market low level here, you're gonna see some acceleration to the upside because these guys are gonna start topping out. Okay. So this is what I would call the reclaim level, so 67.74. So for us to move up, we need to reclaim this level, and then we should see faster movement towards the VWAP, and then we should see a pullback, profit taking. And if everything still looks good, then we have the opportunity to move back up. Any Any questions before I let you guys go? This could be a very slow process, but again, um, it's everything's holding for a bear trap, but everything's also holding for a downtrend. So you have to understand that when you look at it as a bear, you have good news. When you look at it as a bull, you have good news. When both sides look at it and they see good things, or then it means that both sides will keep fighting and they haven't given up. So the best trades happen when one side gives up. And so if we get above this pre-market low level, the bears should give up and we'll get momentum up. If we break below this low of day, the bulls will likely give up and we'll see momentum to the downside. So those are your two levels to watch for, where one side likely will give up and the trade will become easier. But right now, they're both fighting for that trade.